Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us, Chief Where Are We economist at EIU, Constance Hunter, joins us after a good conversation last week. It seems like 3 months since we last talked to you. I think it was 2 cups of coffee ago.
Is it only Tuesday?
Yeah. On a day-to-day basis, how do you sustain your analysis?
So, as Lisa was giving her excellent rundown, I was thinking about how we spent all of yesterday looking at the pharma codes. So there's 2 codes. There's the codes that start with the number 30 that are all sort of the finalized goods. There's the codes that start with the number 29. And those are all the goods, the intermediate goods that go into pharma. And of course, Trump is threatening these pharma tariffs. And we're trying to get ahead of this by like really just ingesting all the codes, thinking about what the impacts would be.
The bottom line is he may screw up our feed of antibiotic materials. That's what we're talking about.
Yes. I mean, when you put tariffs on like this, and we've basically embargoed China, there is not going to be any more supply of many, many goods from China, right? We do that to pharmaceuticals. It's a very dangerous game to play in an ad hoc way.
So you put all this stuff in a blender, and I don't know what goes in this blender anymore, but what does it do to your economic forecast? Do you even, I guess you have to keep taking it best
obviously we keep analyzing and expanding our modalities for analyzing what the weighted average tariff rate is. But what we have, and this is almost stupidly simple, but what we have done is we've looked at the uncertainty index that Baker and Bloom put out from Stanford. Now, one of the bases of that index is actually the EIU database, our written work over the last 30 years. That's one component. Another component is the change in tax code that's anticipated over the next 2 years. Obviously, we have the TCJA coming up. That leads to a lot of uncertainty. And then the dispersion of economic forecasts. And when you use this index, you can see that it is correlated with recessions. You know that those recessions they were called after the fact, as NBER does, and probably that data ended up being revised down. So we know that this forecasts and corresponds with a reduction in capex, a reduction in consumer spending, and of course those 2 things together mean lower employment growth, eventually declines in employment.
Okay, where are you on jobs? The elasticity of all of these emotions, the crisis, whatever our listeners and viewers think, the bottom line is, I'm sorry, if I'm elected free beer, it comes back to jobs, right?
Yeah.
When do claims pop or other series that Constance Hunter looks at?
Yeah, and I mean, we're expecting somewhat softer jobs in the April report, but that's going to be a really critical factor, I think, in when the Fed can actually go ahead and move rates, right? So as long as jobs are holding in there, and of course, we know it's at best a coincident indicator, probably a lagging indicator in many instances, but they are still going to wait to see some weakness. So we're going to look at things like hours worked. We're going to look at the diffusion index. We're going to look at the composition of what types of jobs are being created, because state and local governments are probably going to pull back on some of the hiring they've done. They did make up hiring over the last 4 years since the pandemic, because they were under hiring in all the years following the global financial crisis.
Do you have a recession in your forecast?
We do have a recession in our forecast.
And how deep and
it is
how characterize that?
So it is concentrated in the second and third quarters.
Okay.
We do think the Fed acts. We think the Fed goes 4 times this year. But it really just depends on if we can dampen down some of this uncertainty. If they could come out and be a little more clear in the way they communicate.
Oh, come on, you're dreaming. What are you, an economist? I mean, whatever anybody's political persuasion, Paul, am I right? We're hanging headline to headline?
Sure.
Lisa,
companies can't plan. Nobody does CapEx in this environment.
Okay, Lisa, to cut to the chase, China said we want Seattle. Boeing does a ton of work with Cathay Pacific and the rest, and now they're saying we don't even want the parts from Boeing. And I keep getting notes from smart people saying, It's a whole supply chain thing.
Yeah, and the supply chain is so integrated across borders as well, right? I mean, we can't do manufacturing.
Your shop, EIU, owns
Well,
supply chain analysis. What do you look at?
So
in the
we're looking
supply
at
chain?
all the intermediate goods, right? So if you think about even manufacturing in the U.S., even the manufacturing we do here, it takes imported parts and puts that into the final goods, right? So this is like the policies of Juan Perón in Argentina in 1945, when he said, well, we're just going to make everything here in Argentina. Like, if we keep going down this road, it does not end well.
That's the first time I've heard that. That's brilliant. Man, I saw Anne Marie in Buenos Aires last night.
Yeah.
She had the red Balmain thing going. I think she looked like Evita.
Yep, exactly.
I was looking at Anne Marie going, it's Evita.
Anne Marie's, she's a pro.
She's very Madonna.
What do we do here with our labor market here? Do you fear that we're essentially a fully employed labor market with low 4% unemployment? Where do you think that goes?
Oh, I think it has to go higher, right? And we have a pretty, I would say, tempered forecast for the end of this year. If I were going to guess, the risk is to the downside, right? So we have it going up to 4.6, I think 4.8, and then you get into when does it become nonlinear, right? When does it go from 4.8 up to 5.5, right? And how quickly does that move happen? Because that's what happens if you really get into a vicious circle.
You're the first one on air. I want to finish up with this. You're the first one on air to bring up what I'm focused on. And folks, this goes back to my major in college and all that, and a long time ago. And that is the pharmaceuticals. And I think people are like, oh, one, I can't spell it and it's too complicated. But the answer is all of those pills we give our family members, particularly our kids when they're sick, have materials from China. Mm-hmm. That's an accurate statement, right?
Mm-hmm. And think of all the people. We have an aging population. Do you know a person over the age of 60 that doesn't take at least one prescription a day? Very few.
Oh, no, I've never confronted that. She's such a wise ass. I mean, if I look at this concept...
I put myself... I'm not over 60, but I still... I'm at the age where I'm taking one medicine a day at least.
You and Michael Barr. But the bottom line, Constance Hunter, is, and I'm suggesting here, or maybe exaggerating, this pharmaceutical debate is way more than just another press release or Oval Office statement from the president.
Absolutely. It's really, really significant. And when you combine that with the fact that we withdrew from WHO, that we're gutting HHS staff, it's really has significant ramifications. Remember Robert Gordon? One of the things, rise and fall of American growth, he cites 5 things that contributed to productivity of the early 1900s or mid 1900s, and penicillin is one of them.
Right.
Why? Because medicine helps people get sick. Recover from being sick faster. It means fewer people die, and that improves productivity.
And the polio vaccine, which I remember the pink drops.
Yep.
Constance, thank you so much. Constance Hunter with EIU here.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
It's a week of bank earnings. JP Morgan. Over on the investment side, Goldman Sachs, JP Morgan, equity trading, ginormous. Citigroup today, 229,000 employees. Mm-hmm. How about, Paul, published on the Bloomberg, a bank with 951 employees. Toms River, New Jersey.
Jersey Shore, baby.
There we are, Jersey Shore. Joining us now from OceanFirst Financial. I'm loving that we're doing this. Nobody told me that we're doing this. This is great. Christopher Maher joins us from OceanFirst Financial. It's back, I guess, to 1902. It was Point Pleasant before.
That's right. Yeah, that's right.
Okay.
Yeah.
This is great. We are so mental about talking about these ginormous banks. Just simply, in this modern age, how do you compete with super regionals in the ginormous?
Well, it all comes down to your relationships with your customers. So, we were founded in 1902 as the Point Pleasant Building and Loan Association of Point Pleasant Beach. So like the Bailey Building and Loan, right? Over the years, commercial bank, diversified. We operate throughout the Northeast. And what we found is customers really value that ability to have a conversation with a banker, a trusted partner, someone who's going to deliver. And you're going to compete on that, on doing what you promised you're going to do, doing it quickly and effectively. And if you do that, you're going to do just fine.
Chris, what's a typical corporate customer for your bank? What are they like, and what are they telling you these days?
So, most of our clients are small, kind of family-owned businesses. We cover a geography between DC and Boston. All sorts, could be manufacturing, logistics, services companies. And what they're telling us today is certainly there's a level of apprehension given all the volatility, but they're not overly concerned. Many of these folks took a master class in supply chain during the pandemic. So they've got, secondary and tertiary suppliers. They've got different warehouse capabilities. They are concerned, and we're concerned about how long the volatility continues. But generally, they're weathering it pretty well.
I mean, that's something that Tom has talked about a lot, which is corporations adapt. And maybe that's kind of what you're seeing here. Are they putting projects on hold? Are they waiting? We've heard that from some of the larger companies out there, the larger banks. We've heard from even more Morgan Stanley saying a lot of their clients are just saying, just let us wait a little bit. Are you seeing that at the local level? Yeah,
Paul, some are. So I'll use an example. We have a plastics manufacturer that was in the process of doing a significant expansion, buying some equipment, some of which was from Germany, some was from China. The cost of the tariffs on that equipment would have raised the cost of their project, I think, in the range of $600,000. They're likely going to continue with the project at some point, but it doesn't make sense to just forge forward and pay those tariffs. They're going to wait and see. And if this is a short-term thing, I don't think it's going to upset much, but the longer this goes on, the concern builds.
I'm fascinated by the day-to-day grind of a very small bank versus the major. Now, on your website, you hired Zachary Hauser in Northern Virginia. He's a Minnesota Vikings fan, which is, I don't get it, but there it is. Why would Zachary Hauser leave Bank of America, Wells Fargo, and the iconic Buffalo M&T Bank to join an itty-bitty bank in Toms River?
Yeah. So look, we built a following, and I think professionals from around our industry understand that the number one thing that's important to them is their ability to serve their clients. And although we're on the smaller side, at just about $14 billion of assets, we're a top 100 U.S. bank. Wow. That's both wonderful and terrible, right? We should have more banks in this country. But that gives us the scale to be able to support very large businesses.
I mean, this just came up. Paul just sent me an email. Paul, I think a refi through OceanFirst Bank, I think it says it.
I know my bank.
Jersey Shore, you can take your Vespa down there.
Exactly.
Check it out.
I can find these guys. So, Chris, you mentioned, maybe we need more banks. I think what a lot of people came to understand when we saw the regional bank crisis of several years ago with SVB is, boy, we have 5,000 regional banks around the country. No other country has that. Shouldn't we consolidate the regional bank business? How do you think about that?
Well, certainly there's a need for efficiencies and consolidation. I think we'll see some of that. But on the other hand, we provide a niche, regional banks in general, where we're the Main Street lenders. So when you think about these family-owned, privately held businesses, the majority of credit to that sector comes from regional banks like us, between $10 billion and $100 billion in deposits. If you think back to COVID, we were the industry that jumped in and handled the PPP out of the gate. We were faster than the big banks. We made early commitments to doing it. And in our case, we were one of the first lenders in the business getting dollars on the street to our clients. So we do need that kind of layer of banks that are much more responsive to their customers.
Did you read Jamie Dimon's annual letter? 58
Absolutely.
pages?
Absolutely.
What do you take from Mr. Dimon's letter that you can apply to 951 employees out of Toms River?
There's a lot of commonality. So when you think about the principles that Jamie runs by, and we believe the same thing, you want to have a fortress balance sheet. Look, we don't want a recession, but we're prepared for a recession. If you're running a bank, you better expect that one could happen. I think the discipline about doing the right thing by your customers, by your employees. Probably my favorite story is the outsourcing of their security, and then the re-insourcing of their security, because at the end of the day, you want to make sure that your people are connected to the customers.
Private credit. How is that? Is that a competitor to you in your market? Because we've heard about it, that they're competing with the JP Morgans of the world and taking business from them, or maybe substituting for them. Are you seeing it in the smaller markets?
Absolutely. Private credit is a competitor. But interestingly, they're also becoming a big client of ours. So in many cases, we are doing more and more business with private credit, where we're lending along with them, coming into joint credit facilities, or lending to them either on a deal-by-deal basis and note-on-note finance, or lending to the fund itself. So
Right.
I think it's the fastest growth area for us.
I mean, I gotta ask. I mean, I don't mean to be rude, but I'm going to be rude. Are you guys helping out John Bon Jovi with his Soul Kitchen in Toms River, New Jersey?
As a matter of fact, we did a joint project with John Bon Jovi in the Soul Kitchen. We built out a new facility a couple of years back. We were one of 4 donors that helped make that possible. The OceanFirst Foundation has made over $50 million worth of grants in our communities. And that was one of our special grants a number of years ago.
Did he sing a concert for at your board meeting?
We didn't get a concert, but he's a very gracious man. So.
Chris Maher, thank you so much. Greatly appreciate it with OceanFirst.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I've said this before, that there's like 422 books out on asset allocation and diversification. In the single read for adults, both Global Wall Street and people engaged in the debate, is from Sebastian Page. His day job is at T. Rowe Price. His night job is to sit in the Orioles dugout, and he writes it on like an iPad or whatever. And we celebrate today his new book, that is out, and it's a shift. It's called The Psychology of Leadership. Sebastian Page joins us right now. Come on, you're doing a Malcolm Gladwell thing here. Why are we doing this? Why are we doing the psychology of leadership? Did Cal Ripken put you up to this?
Tom, that's a great compliment. I think Malcolm Gladwell is a great writer. And by the way, Tom, I don't write on iPads. That's pretty hard if you're a writer. I'm super excited. The book is coming out today. I'm basically giving you an exclusive in the broadcast media. And there's a lot in there for investors, Tom, in particular sports psychology, which I find absolutely fascinating. You have to learn about losing. Federer said in a statement to students in a commencement, he said, whatever game you play in life, you're going to lose. And so that applies to the psychology of leadership, but of investing as well. And what we do every day, Tom, in financial markets,
right,
differentiate between luck and skills. That's important too.
You've got a great idea here. I saw an Ogilvy, David Ogilvy, one of the giants of advertising. There's no statue to committees in parks. You go over to Central Park, and there's no statue, Paul Sweeney, to a committee. You've got a chapter in there on rethinking team leadership. Are we to team leadership now, Sebastian Page?
In psychology, there's a lot of research. It's become very popular to talk about introverts and extroverts. And so in an investment committee, you can see those dynamics. The research is fascinating because it shows that when people take time to think about their decision on their own and do independent thinking without the influence of others in the room, and then bring those decisions to the table to debate them, the outcome on decision-making is generally better. So I find that fascinating. And in our asset allocation committee, what we do is before the meeting, and we have one tomorrow, everyone submits their thinking, their views on tactical asset allocation independently. And then we collate them and discuss them as a committee. This way you remove things like groupthink, Tom. But, we all say we hate meetings. Meetings are essential. Collaboration is essential. At T. Rowe Price, our collaboration style is, I would say, different. We see the exchange of ideas as a source of alpha. So it's super important for us to get it right.
I would point out that T. Rowe Price invented this, folks, a few years ago. I mean, they were iconic on the buy side, Paul, for fractious debate.
Sebastian, how do you think, what's the best way to learn leadership skills? I just came from a board meeting at the Business School of Duke last weekend, and that was a big topic at the board level, talking about leadership and how you teach that. How do you think that's best instilled?
So in the psychology of leadership, I talk about several ways in which what we think about leadership is wrong. For example, you think a leader needs to be a great communicator. Well, the higher you go up the organization, the more you need to listen and be a good listener. We think leaders need to be decisive. A lot of really smart, effective leaders I've known knew how to look at decisions where they needed strategic patience. That's often counterintuitive because we all want to be super decisive in investment management too. And so you also think the leader needs to build consensus and be agreeable. But sometimes as a leader, you're not a leader if you're not making the tough decisions. So you also need to be able to be disagreeable. And the last one that's counterintuitive and that I think is a big part of learning or relearning leadership is this idea that the leader is unflappable and there's no stress there. And the reality, and sports psychology shows that, and positive psychology too, is that stress increases performance up to a point. And leaders have to be able to handle it and be vulnerable about it, and to a certain extent, embrace it.
So there's a lot of stress out there in the marketplace, in the workplace, whether it's driven by technology, changing political trends. How do leaders kind of within their institutions deal with stress and kind of manage that throughout the organization?
So we all try to push it out, right? We all go around thinking zero stress is where I'm going to get optimal performance. What I've learned from sports psychology, I explain this in the book, it's fascinating. Performance increases with stress up to a point. And there's a point of optimal performance that's not zero stress, whether that's for organizations or individuals. And then after that, then you choke and you get the negative effects of it.
There's a little stress out there right now, Sebastian Page. What should our stressed listeners and viewers on YouTube do in these stressful times? Do they radically shift their portfolio? Do they tweak it? Do they go play golf, or do they go watch the last place Baltimore Orioles, sponsored by T. Rowe Price?
Thank you for the plug, Tom. I always appreciate it. And by the way, thank you for supporting my books, my first one and this one as well. You're very gracious to everyone in the industry.
You've got well, thank you, Sebastian. But you have a movie coming out in the first book, right, with DiCaprio?
I don't know if that movie would sell. Talk about asset allocation and diversification. Maybe there's a Hollywood version somewhere. But look, the market has sold up. We lost 10.5% in 2 days a couple of weeks ago. That was like we've only seen this or worse 3 times since World War II. So we're going through real volatility. Tom, I know you like to watch at the VIX. We went above 50. So we're in a situation where in our investment teams typically would be leaning in. Because this is when there's panic and you want to have the opposite reaction and take advantage of higher risk premium. But I would say right now on our platform, because markets are still expensive and earnings expectations are still high at 11%, and growth is slowing and was slowing into the tariff wars, we're actually closer to neutral in most of our portfolios, most of our discussions. Even some investors are looking to sell counter rallies. So unlike other sell-offs, for the next couple months, I would say on our platform, we're more cautious.
Sebastian, in terms of leadership, has it changed over time? Does it change over time? I mean, when I was coming up in investment banking, my vice president told me to, work this weekend to do this deal. That's just what I did. Does that still work today?
I think it has changed. It has evolved. The cultures across industries, but in particular in the investment business, have evolved. And in my mind, they're in a better place. I think, Paul, the thing that's missing that we need to talk about more is the meaning of what we do in financial markets. And to a certain extent, we have a little bit of a crisis of meaning, if you will, with index strategies and so on. To me, the meaning is that every day we go to work, we try to make money for our clients to give them better retirements. Like we're not solving, big cancer. But we're going to work to make money for our clients, and that's incredibly meaningful. We want to give them better financial lives. So I think that's the next step. I think our culture has evolved in our industry in a positive direction, more mutual respect, more building trust. But the next step is to go back to the meaning of what we do in financial markets. It's hugely important. We don't talk about it enough.
Sebastian, a lot of people are sitting there staring at the ceiling or whatever in their car alone going, what in God's name do I do with a depleted 401k? Is it a time to be bold? I get so much. We had Katie Greifeld, and she was brilliant on marketed caution. It's like, okay, people are scared stiff. let's be cautious. And there are all these cautious strategies. How does Sebastian Page adapt to the marketing of fear within the industry?
There's a lot of fear. There's a lot of emotion. I was on a client webcast last week, and we had about 100 clients. And one person in the Q&A wrote, look, I'm panicking about my 401k. I'm retiring in 5 years. Should I sell everything? And I think that's the wrong way to look at it. It's trite. You can put it in a fortune cookie, but those are the moments where you go back to the basics of staying invested for the long run, taking a longer run perspective. This is part of being invested in markets. If you're willing to live through shorter term volatility, you get paid over time. And Tom, if you're 55, or 60, I know you're much younger than that.
Thank you.
But if you're in that spot, you're going to retire. You still have 30 years of life.
Thank you.
It's not the time to de-risk your entire portfolio.
Sure.
Even if you're close to retirement, yes, you're going to shift to generating income, but you still need growth in your portfolio, even in retirement. So this idea that you got to go everything to cash or everything to treasuries, to me, it's just bad advice.
Sebastian, thank you so much. Congratulations on a book timely in this time of emotion and crisis. The Psychology of Leadership, Timeless Principles to Improve Your Leadership of Individuals, Teams, and Yourself. I'll get that out on Twitter and LinkedIn here. Sebastian Page, of course, at T. Rowe Price.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Scott Stringer joins us right now, former New York City Comptroller and a mayoral candidate. There's a primary and there's an election in that. Let's get the primary out of the way right now. New York Times writes it up. The mayor's occupied, the governor's piled into the race, and the line is everyone's invisible. How does Scott Stringer get visible up to the June primary?
Wait till the mayor race actually started. You mentioned my cousin Bella Abzug and the mayor's race of 1977 when Ed Koch was barely a blip during that race until 2 weeks to go. And so everyone who thinks these races end in May, they don't. They actually end the end of June. And I have high favorables, a record of fiscal prudence and a government record that is unmatched in this race. So I'm very confident going into the next couple of months.
Is your constituency off of Nadler and Rest and, the whole thing, is your constituency as organized as it was 20 years ago? Is there a machine in New York City where the Liberal Party, the progressives, can get behind one candidate? Or is it chaos?
Look, I think times have changed in this city. I think people really want a mayor who knows what he or she is doing. They want someone who's competent. They want someone with experience. They're tired of the chaos. They don't want the current mayor, Eric Adams, chaos. They don't want Cuomo chaos. They want somebody.
You went after Bill de Blasio.
I was controller during that time period. I held up de Blasio accountable 364 days a year. I gave him a day off due to Christmas. But I understand city agencies. I've exposed waste and corruption. I know how to run a government in the most competent way. And I think that's what people want. But they also want to live here, to have affordable housing, to have economic opportunity. People who come here understand how critical it is to want to stay here. We got to go back to the compact of safety, good parks, clean air. This is all what a mayor has to do, and we need someone to start focusing on it.
From your perspective, Scott, what is the state of the city today?
I think we're at a crossroads. I don't think people understand just how corrupt the last 4 years have been. And the first thing the next mayor has to do is literally reform the government, bring in the best and the brightest, bring in people who are competent, who want to see a better city. Look, we've got to hire 3,000 more cops. We have to align policing and a mental health initiative. We got to make sure that a strong mayor can take on Trump when he's going against New York City. We need somebody who has that experience, not just pie-in-the-sky promises. And I think I position myself in that way.
Metropolitan Transit Association, the congestion tax, what's your view there?
Look, I think it's working. I think people want to pay a little more to move the city. We have a a city government that depends on goods and services, how they get in and out of New York. But look, let's make it clear we have work to do. Congestion pricing helps some, but we have to build out a 5-borough transportation plan, and we have not done that yet. When I was supporting congestion pricing back when Mike Bloomberg was mayor, we always said we would look at Queens and Staten Island and how we can close those transit deserts. So this is just the first step in a long transportation journey for New York City.
Should mention that Mr. Bloomberg, of course, of Bloomberg LP, is the founder of this radio station and signs my paycheck, and
Exactly.
once a year or whatever. Good morning, Mr. Bloomberg. Scott.
I thought it'd be good to mention him.
That's good. Yeah. And you mention him, I got to mention him. I'm not in speaking terms with him, but that's a separate issue. Scott Stringer, how can liberals be conservative and be anti-crime? I mean, there's a whole modern theology. The last election was, to me, an El Dorado election. Long Island rose up and screamed, "We're afraid." How do guys like you, in a city that's become afraid, support NYPD and support a tougher crime view?
Why do you think that people who are on the liberal side of the equation, or even the conservative side, can't come together and recognize a problem when you see it?
It's not me. That's what we've got in the zeitgeist right now.
But I got to tell you something. It's very easy for me to look at the problem and say, hey, we are having a trouble retaining the police officers we have. You know that young police officers are leaving the police force in droves, and they're not retiring from policing. They're actually going to Long Island or mosquito states like Texas and Florida.
Are they underpaid?
And well, it's not so much pay as it is how do you create a work-life balance. You know, we've gone from $650 million in overtime for policing to $1.3 billion. We have the lowest headcount in the NYPD in generations. We're down to 33,000 cops. So what should we do? It doesn't matter whether you're liberal, conservative, or moderate. We got to hire more cops. That makes financial sense. It also, from a safety perspective, makes sense. I want to put a cop on every train in those high crime areas. I want to align policing with the mental health initiative because we see people languishing, suffering, dying on the streets. When I take my 2 kids on the subway most mornings to go to school, you know what I see? I see what I saw in the 1970s. People languishing on the subway.
I must admit, well said.
And it's actually true.
Scott Stringer here with a primary in June, an election in November, of course, with his public service, his family service over the years to New York City. Paul Sweeney?
Scott, as were you to be elected, what would be the first 100 days of your administration? What would be the focus?
We bring in a whole new government. We reform these city agencies. We have a clarion call for people who want to serve the city to come into this government and do the people's business. That's the first step. Second, I want to build the same kind of housing that was built in a different generation called Mitchell-Lama housing, Mitchell-Lama 2.0. I want to take our 1,000 vacant lots in the city and let's put it to work for affordable housing so families can come here, go to our best universities and stay here in a way that's affordable. I want to put 3,000 cops back on the street. Want to make sure we align that program with the mental health initiative. I want to make sure that we have people taking the police test again. 8,000 people took the police test. Do you know how many people took the sanitation test? 60,000. There's something wrong here. We're just not governing anymore. And also, I want to make sure that we bring back something called quality of life. We'll have a deputy mayor for quality of life. We'll initiate quality stat. We'll break down the silos of all these city agencies. I've audited all of them, and I got to tell you, mental health has to start talking to small business and vice versa. We got to get a handle on this government. You need somebody who actually knows how to govern. And as borough president for 8 years, as controller for 8 years, I know the fiscal situation in the city like the back of my hand. I'm not overpromising like others in this campaign. I'm just going to be me and be the lifelong New Yorker I've always been to fix the city.
Taxes. Pretty much everybody you walk into on the street say, my taxes are too high. What do you say? What's your tax?
Well, let's give people some value for those taxes. Let's go back to the compact we've always had in this city, which is if you come here, you pay a little more, but you're going to get a clean city. You're not going to have rats running around, garbage piled high. I mean, we've got rats walking upright right now. They've come up to me on more than one occasion at night saying, hey, can you beat Cuomo? I mean, this is a real crisis. People say, what am I paying for? What's the value of my taxes? And we have to go back to making people understand that what they get in return is a real New York City that they'll never leave.
What is your policy on immigration and migration and the emotion here of people coming in that are new and troubled.
Well, we've always had people come, like my grandparents came to this city and came to this country. So let's not start filtering out who comes and who doesn't. Let's be very smart about this. Look, you bring gang members in here, get them out. I'd be the first one to stand and say, we want you out of here. No guns, no violence. But for people who flee persecution,
Right.
for people, I mean, come on, we're so much
Right.
better than this. And we can, good government means we can absorb people, we can absorb crises. It
Right.
doesn't have to be a meltdown.
I got to ask you one final question here. I think it's hugely emotional for everyone across this nation. There is an uproar among liberals over a generational shift as identified by Senator Schumer over to something new. John Farrow mentioned at Glenn Youngkin of Virginia, the Utah event of Senator Sanders the other day. Help me here with what the new generation of Democrats look like.
Look, we've always had a new generation of Democrats. You mentioned starting at the show, very, very smart, right? Bella Abzug was a new generation
Brand
elected
new.
official.
Folks, you can't imagine
No one can
how shocking this mouthy woman was,
It was
from the Bronx.
And look, I was a 12-year-old kid running around campaigning with her during the Vietnam War. And you know what happened a few years into her term? The U.S. News and World Report, not the most liberal newspaper or magazine,
Right.
named her the number 3 most competent and effective
Right.
member of Congress. I embrace the new generation. But right now, we need somebody in New York City who represents vision, experience, and competence. Make no mistake, this is a moment where we have to right the ship so that the new generation can come in
Right.
and do what all generations
But
have
some
done.
would say you just described Governor Cuomo. I mean, the basic idea is he's been around, his father's iconic. You're up against Cuomo. What's the biggest detriment there?
Look, he's chaotic, and he's not pro-New York City, and he doesn't like people, and he's running the worst kind of campaign that makes him unelectable in my mind. But no one's going to realize that until June 1st. And I hope to come back on the show as your mayor-elect and talk to you especially about the history of mayoral politics and what went wrong in his campaign. But I am not feeling him.
Scott Stringer, thank you so much.
Thank you.
Former comptroller running here for mayor.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
With our newspapers today, astronaut Lisa Mateo.
Imagine I could dare to dream. Good morning, guys. So the first thing I want to start with is Netflix, and they have some ambitious goals. This was from the Wall Street Journal. They're saying that it hopes to achieve a $1 trillion market cap.
Wow.
Currently, their cap is almost at about $400 billion. They want to also double its revenue by 2030. Executives have this goal of tripling Netflix's operating income by 2030 from $10 billion last year. So this was all in this annual business review meeting last month that some people were in.
Yeah.
They told this to the Wall Street Journal, so they got the inside
Right.
info on it.
Paul, how do they
it's
do
big
this? Do they
numbers.
raise the fee?
Well, that's I was going to ask Lisa.
Yeah,
How do they do it? I mean, I
exactly.
think they're going to raise the prices. I think they're going to continue to ramp up their advertising, in new subscribers in other parts of the
so
world.
you mean ads within the video?
Yeah, have
Does
different
Netflix
tiers.
do ads within the video?
Yeah,
Yeah,
you can
different
pay
tiers, yeah.
you different tiers. So you can do the cheaper version
Right.
and you'll pay less, but you get the ads with
Okay.
it.
So-
And that's like,
I mean, 400 billion market cap, stocks up 5% this year, but up 50%.
what
over
would
the
you
trailing
pay
12
for
months.
months for Netflix?
Oh, I don't know. I mean, I don't know.
I
It's
don't
just-
know is my answer.
Yeah, I don't
look.
know. Today, you just.
I think it's
I'm
like
going to go look at my phone and.
about $18.
So what would you
about
pay? Would
a
you pay
month.
$24.99?
No, I don't think. I think I would have to go for the commercials, even though my kids are like, we don't do commercials. I don't care. I
don't do commercials.
I mean,
Next.
Oh, jeez.
so that's that. iPhones, right? We've been hearing different stories about how much the price of an Apple iPhone can go up because of all this tariff uncertainty. Business Insider actually went to all these Reddit posts, people talking about it, and they're saying what they're doing to avoid these pricey upgrades, save money on the device. For example, some are doing the maintenance now, right? They're doing the upgrade now, but others are keeping up with the battery life because that's what seems to go first.
Yep.
When you have your phone, it's always like, oh, the battery's dying, I need to upgrade. And they're saying, no, you just need a new battery. So they're saying you can
Okay.
do something like that. It's about $99 or so. You can get the new battery. But something else they're doing, they're saying iPhones come with this limited 1-year warranty that you might not even know that you have. So it has it. So go check it out. And they also have this Apple Care Plus thing. It's about $14 a month.
I do Apple Care.
You
for
do
a lot
do
of
the
things.
Apple Care.
Yes.
See, I haven't even heard of that. I have to get into that because it covers the repairs, the replacement. If you lose it,
And
I mean,
if you get them on the phone, they treat you differently than just a number is what I would say.
did you know you're paying $14 a month?
Where's Apple in 2 weeks? We don't have a clue, do we?
No, I don't know
We
where.
have no clue where
I don't know where
their
the economy
business
is.
You know, the uncertainty are folks off the chart. Good morning, Nick Booth out at Stanford. One more. What do you got?
Okay, you touched on this a little bit. All the talk, right? Rory McIlroy's victory at the Masters. I have the numbers for you because you were talking about the ratings and how much people were watching it. CBS said it attracted 12.7 million viewers Sunday. That's a 33% increase from last year when Scotty Sheffield he won. It's the most watched match, since 2018.
Sheffield. He played with Def Leppard.
Scheffler. So it was the most watched one since 2018.
I know.
So the tournament really needed the boost too. Then the article kind of gets into that as well.
What's the next big tournament?
Boy, I don't know
Like
what they
PGA
changed up.
or-
Yeah, one of the other. I think it might be the British. I'm not sure. The Open Championship, as they call it. I'm not sure, but they've got them spaced out pretty much throughout the year.
Okay. Is that all you got today?
I did. Well, you know what? You talked about the Blue Origin flight.
Yeah,
yesterday.
how'd that go?
Well, you know what? A lot of people have been giving them some backlash. Gayle King, Lauren Sanchez,
Why?
a lot of celebrities, because they're saying it was commercialized and that
Yes.
type of thing.
It is a commercial flight.
It's for rich people. I get
Yes.
it. I'm not going to pay $150,000 base pay. Why are
I'd
they
pay that to
giving
send
them?
Lisa up there.
Why are they giving him garbage? I'm serious.
Because they're just saying that they were sellouts. They also have the environmental factor for
Oh,
it. They're
please.
saying it does,
Yeah.
it's no point just going up
Are you
and
kidding?
going
Oh,
into the environment.
We
so
upset the desert of Texas when the capsule landed.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.